All right, let's get some outlook in here now for the pork industry. An economist, may need a translator at times, but we'll see what we can do here with Steve Meyer with Paragon Economics. Always good to see you, Steve. Some encouraging news for the pork industry in 2012.
Certainly is. It looks like a good year. I mean, producers have an opportunity right now, should they be inclined to do so, to lock in profits on production for this year. My calculations as of this last week were about $12 per head on the average Iowa farrow to finish operation. So that's a good year. And very strong hog prices. We're going to have a few more hogs available this year, but I don't think it's going to weigh terribly hard on hog prices. We should get some help from the other species as well on the demand side.
Well, yeah, we're hearing about, even in this economy and even with higher prices, consumers are still choosing pork.
Well, they're still choosing pork, and demand has been good. I mean, for the year, we're going to end up 1% or so on demand. That's not consumption. That's the combination of quantity and price. So they've done pretty well on that. That softened in the second half of the year, though, so there are some concerns there, and it really softened as the economy softened. We expect to have about a 3% fourth quarter GDP growth number announced today, which that's encouraging. We've seen the Restaurant Performance Index pick up some, so that says that consumer level demand probably will strengthen. So if we can add to that as a general meat demand, like I say, we think beef prices are going to be very high this year. We have to believe that chicken is at some point going to get some price traction with their production reductions. And if those happen, I think we could have a very good year in the pork industry.
And expecting another big year with exports as we see that Korean market and others really come online.
Absolutely. I mean, how do you follow a plus 23 or 4% increase in exports? That's a tough act to follow. And I've said if we hold our own on exports this year, that'll probably be a victory. The dollar has strengthened a little bit, but it's not a strong dollar by any stretch of the imagination, so our products are still competitively priced. And, if the U.S. economy starts growing at 3%, the Asian economies will probably grow significantly faster than that. And so I think we should have another good year. The key to that's going to be what happens in China, Hong Kong. They were a big customer this last year, and they tend to be a little fickle.
Always a lot of political and economic factors that weigh in when we're talking exports, but it seems there is that worldwide demand for more meat in their diet.
Well, there is. I mean, and you're talking about a part of the world that likes pork. It's an important part of their diet. The economies there, I mean, China, Hong Kong, Korea, Japan. Japan hadn't grown very well, but the others have grown very rapidly. Growing middle class, high propensity to spend that extra money on protein in their diets. So a lot of positive things for pork demand.
It seems like we were just talking about needing to draw down this the herd size, but now are we going to? You said not much growth right now, but do you see that starting to now turn around? We'll start building it back up?
Well, it looks like we are building a bit. The sow herd was up a bit the second half of the year, but less than 1%. But the real driver of this increased production for this year is going to be productivity. We've grown litter size by an average of 2% per year for 4 years now. And the genetics are there, the management systems are there, the economic incentives are there to keep pushing that and to accept those, to adopt genetics quickly that will increase productivity. So I don't look for the breeding herd in the United States to change very much. Our output levels will still change because we still have room to improve from the productivity side.
Of course, real quick here, it will, of course, be feed costs, input costs.
Well, feed costs are going to be important, and as I point out, every year we're at the edge of the cliff. I mean, we only have 800 and some million bushels of carry-out projected for corn. It's dry in Minnesota and Iowa right now. I'm looking at this going, boy, this could be bad. I told the group this week, we could see corn prices start with a 4, and we could see them start with an 8. I mean, that's in the possibility or the realm of possibility.
A lot of unknowns. We'll be watching this weather very closely. Steve, good to see you. Thanks a lot.
Thank you, Mike.
All right. That is economist Steve Meyer with Paragon Economics, and does a lot of work for the pork industry. Coming up next, the Iowa Pork Producers Association just held their pork congress. In fact, it just wrapped up. We're going to talk with their executive director, Rich Degner, get some thoughts on what were producer attitudes at that meeting and what are some of the key issues facing the Iowa pork industry as we look forward to this new year. Stay with us. More from Des Moines coming up on AgriTalk.